Hi everyone, in this course you are going to learn how to use the Inside Bar False Breakout as a confirmation signal in combination with supply and demand zones. So what is an Inside Bar False Breakout? An Inside Bar False Breakout is an inside bar pattern followed by a false breakout. In other words, an Inside Bar False Breakout is created when price breaks one way from an inside bar pattern. Then price snaps back the other direction. When this pattern occurs in a supply or demand zone, it can be used as an entry signal. Look at this example. This is the Aussie GPY for our chart. This is the supply zone. As you can see, the move is quick and strong. The candles are big. The previous support level is broken. The zone is fresh and the risk to reward ratio is attractive. When the market returns to test the zone, prices form this inside bar false breakout. This pattern shows that buyers are trapped by sellers because this inside bar means indecision in the market. In other words, buyers and sellers are still in an indecision phase. The breakout of the inside bar means that the market is no more in an indecision phase and it is likely to go up. So buyers will enter after the breakout thinking that this supply zone doesn't work. But what happened is prices will return and close inside the pattern, forming a false breakout. This false breakout indicates that buyers are trapped by sellers, and this pattern can be used as a confirmation signal to enter the market. So you can place a buy order at the close of this pin bar, the stop loss above the upper shadow, and the profit target is the next support level. Look at another example. This is the US dollar, Canadian dollar for our chart. This is a clear demand zone. As you can see, the market is strong. The candles are big. The previous resistance level is broken. The zone is fresh. And the trade offers a good risk to reward ratio. When the market retraced back to test the demand zone, prices formed this nice inside bar false breakout. So to enter the market, you place a buy order at the close of the pin bar, a stop loss below the lower shadow or below the distal line, and the profit target is the next support level. Alright, look at another example. This is the Aussie US dollar for our chart. This is a clear demand zone. The basing candle is this inside bar. So to draw the zone, you draw the proximal line at the close of the inside bar and the distal line at the lower shadow. When the market returns to test the zone, prices form this inside bar false breakout pattern. So to enter the market, you place a buy order at the close of this pin bar. Stop loss should be placed below the lower shadow or below the distal line. And the profit target is the next demand zone. So this is how we can use the inside bar false breakout pattern as a confirmation signal in combination with supply and demand zones. See you in the next lesson.